Hi, welcome to the introduction video of EquitySutra. This is one complete course on Indian stock market, and I have divided this course into 10 sections, and in this introductory video I am going to tell you about all these 10 sections and what are the topics which we are going to cover into these 10 sections. So section 1 talks about the common generic questions which most of us ask when we hear stock market for the very first time. So I interviewed more than 500 people, and most of them were newbies into stock market. They are about to enter into the market, and I asked them one question, that if I ask you one question, or if I ask you to ask me one question which you want to get answered from me about the stock market, what will be your one question? Then obviously many people came with different questions. So what I have done, that I have taken top 12 questions and rearranged them in such a format that we can go with a flow where the easiest one or the much required one get answered for the very first time. So section 1 is about all those questions, 12 questions which I'm going to answer in 12 different videos. Section 2 is about fundamental study. In a simplified way, I can say in this section I'll try to explain how to pick up a stock confidently to invest. So technically in MBA colleges and stock market courses, this portion is called fundamental study. In fundamental study, what we learn is basically about our economy, this country's economy, Indian economy. Because the moment you think about investing into one stock, you basically invest into one company, and that company belongs to one sector, and this sector belongs to one economy. So when we talk about investing into Indian equity market, all we talk about is on a broader level investing into Indian economy. So knowing the economy is very important. This is what we will learn in sector 2 first class, and then moving onwards what we will learn is what are the different sectors, which sector is more aligned with the economic growth, what are the pros and cons of certain sectors in the how to analyze that, how to see the indicators of sector growth and decide which sector I have to invest into. Then once we have done the economy part and the sector part, we will get into the valuation techniques. So there are primarily two kinds of valuation techniques. Some people also talk about third valuation technique, which is option pricing, based on option pricing. But what we are going to learn here is two different type of valuation technique in this section. One is relative valuation and another is intrinsic valuation. So obviously people have their own limitations in when you are a retail investor, when you are a guy who is just getting into the stock market, or you are one student who want to make a career into stock market. What will happen that you won't be able to focus on all the area, all kind of valuation technique. So probably you have to do a mastery on one of the valuation technique, and it will be good enough to go ahead and start investing into stock market. But we will be talking in detail about all the three valuation techniques: relative valuation, intrinsic valuation, and option pricing. Option pricing method we will be talking very briefly. Then what we will learn obviously into these three valuation techniques is also about balance sheet, profit and loss statement, and cash flow analysis, cash flow statement. Because when you have to do the valuation, you have to understand the numbers, and you have to understand also how to pick up numbers from the major financial statements and then analyze accordingly. So this is the second part of the course, which we call fundamental analysis, or pick up stocks confidently to invest. When we talk about investing into stock market, it is not only about investing into one company. It's basically creating your wealth through a pool of stocks. When I say pool of stocks, means it's like 7 to 8, 12, 14, 15 stocks you need to identify, and then accordingly place it into one basket or portfolio which is called also the portfolio management. So in the third section, we will learn about portfolio management, the very classical theory of portfolio management, how to design your portfolio, based on your risk appetite, how to design your portfolio as per your own understanding about the sectors and market, learning about what are the large cap stocks, mid cap stocks, small cap stock, and then accordingly formulate a portfolio which will be well suited for you. So portfolio management is something which we will learn in third section through different chapters. In section 4, we will learn about risk management. I mean, one of the very generic question which was asked to me was, don't you think stock market is risky? And my answer is yes, stock market is risky, and all you need to do is learn how to manage risk. So taking a risk management portion was equally important. So the fourth section is risk management. So we'll define you what are the different type of risk, market risk and industry risk, company risk, compliance risk. So different type of risk we will talk about in this section. And then we will learn about different hedging techniques, risk management techniques. And when we talk about risk management tools, what happens that you need to learn about derivatives. So here we will introduce the derivative part. We will learn about futures, options, both of the options, call option and put option, and then try to understand how to basically utilize these derivative products or use or apply these derivative products to safeguard your portfolio of stocks, to safeguard your stock investment. So this will be the fourth section, risk management. By this time, you will have enough knowledge about market, fundamental study, risk management, portfolio management, but then there are always contradictions. There are always what you can say is like, trivias. So trivias like, okay, you told me that the companies needs to be, checked every quarter. Their performance needs to be checked every quarter. And I have seen many times that a company which has came with poor quarter numbers, stock prices has gone up. And a company which has came with very fantastic number or posted a good profit, but still stock prices has gone down. So these kind of trivias are there in the market, and what we are going to do is we are going to discuss about such trivias which keep haunting many people in terms of they find it not very accurate with the fundamental or the technical this thing. So we can say that we will talk about the exceptions of the market or the trivia of the stock market. Well, there are unusual situations, so that's our section 5. Then there are unusual situations where you need to understand about buyback process, impact of merger acquisition on the stock prices, taxation, how taxation will impact you, tax harvesting schemes or the processes, how exactly people apply these kind of things. So those unusual situations we will be discussing in section 6. And any stock market course is not complete without a technical analysis. I'm not a very big fan of technical analysis. Here onwards, this course goes towards trader mindset of people as well. So till now, whatever I was talking about from a perspective of investor, stock market investor. But here from section 7, we will introduce the concept of trading. So people are there who trade into the market, there are people who invest into the market, and then there are people who gamble into the market as well. We will be focusing this course towards investors and traders so that people don't become gambler of this market. And then from section 7, we will start with technical analysis, a course for traders. So though I'm not a big fan, but then yeah, I do use technical sometime, and I would like to explain chart patterns and all those other stuff about the technical analysis in section 7. In section 8, I talk about 2 specific tools of trading which I have been using from almost 10 years. They are option trading strategies and statistical arbitrage. So options, when I spoke in the very beginning where I was talking about the section of risk management, I told you that option is for the risk management. It is there to be used as a tool to hedge your portfolio, to hedge your stocks against certain events. But then there are people who became option traders, they become underwriters. So what an insurance company do is the right options, the right insurance for the people. Insurance for the people is here the same thing is like, you know, the insurance option. When you are going to buy, someone has to write it, someone has to sell it. So option trading strategies is one tool I've been using, and this is what I'll be talking about in chapter or the section 8, first section. In second section of section 8, I'll be talking about the statistical arbitrage. A very simple example about the statistical arbitrage. Statistical arbitrage is like this. You know about two companies, TCS and Infosys. At the same time, you buy a derivative future of TCS and sell Infosys in an anticipation that one will go up and another will come down, and you will make profit in both, or one will go really high and the differential between the, you know, the profit and loss on independent or individual shares will give you a resultant sum of profit. So this is called the statistical arbitrage. So in the statistical arbitrage, basically you select two stocks from the same sector, almost same weight kind of a stock, and then you trade between them. You buy one and sell another one. So in section 8, we will be talking about trading techniques, two trading techniques, option trading strategy and the statistical arbitrage. In section 9, which I think will have most of the learning, is the case study part. In this case study, I have divided the whole section 9 into 3 portions. The very first portion talk about the big events which has happened in the stock market, starting with tulip mania in 1600s to Great Depression in 1930. We have to take the example from the Western countries because in India this stock market is a new thing, and from those era we don't have much references or the examples. But yeah, after these two, we'll jump to 2008 crisis, and we will talk about the 2008 and 9 crisis and its impact on Indian stock market, what exactly happened behind the scene. So independent case studies and what is the learning we can get out of them is something we will be discussing. So first 10 videos will be about 10 case studies. Second 10 videos will be about those 10 companies which have made maximum wealth for the investors in India. And the last 10 videos in section 9 will be about those 10 companies which has eroded the maximum wealth of the investors, where investors have lost most of the money. So this is all about section 9, where we will be talking mostly about the stories and history past, and try to learn something from the mistakes which has been done by investors, or the corruption done by different people, or the frauds which has happened, or the crashes which has happened. So these kind of things will be covered in section 9. In the last section, I'll be talking about myself, why I'm making this video or why I made these videos, my own journey of investor and trader with some proof. I try to be very, very transparent there. I don't want to talk about me or my own investment journey or trading journey in the very beginning, because I don't want you people to make an assumption about me. It is not me who is important. It is the right knowledge which is important. It is the simplified knowledge which is important, which I'm trying to do into this course. So that is why I'll be talking about myself in the very last section, my own trading and investment journey, and most importantly why I made this course. There will be some learning probably from the last section as well, but altogether this whole course will be covered in 10 sections and approximately 100 videos. I don't know what will be the total duration of this course because I have not decided that yet. I want to go with the flow. I'll upload the very first video, spread it among my friends and people who have been asking me to explain them about investing into stock market, taking their opinion. If everything is going fine, without changing anything from this course, I'll complete this sections, the 10 different sections in the same flow. And if I get some good suggestion from you people, where I'll be uploading this on YouTube, so you can comment and tell me. You can also email me. I'll give my email address into the description of the video. So if you want to contribute also to the content of the content creation of this video, You can also contact me there. I reside in Gurgaon in Sector 48, Central Park Resort, or you can, and this is where I'm shooting this video. This is all. This is all I wanted to talk in the introduction video. Let me know your opinion. Let me know through your comments, and thank you.